Well, on to a CNBC TV 18 exclusive then. We caught up with former Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia, and he is of the opinion that the composition and competence of the Reserve Bank of India Board must be properly worked out if it is not going to be purely decorative. Here's an excerpt.
Well, post that 9-hour board meeting, it looks like a truce, if we may call it an uneasy truce, has been arrived at. Some decisions have been taken, but others have been postponed to a later date. December 14th is the next board meeting of the Reserve Bank of India. To start with, what did you make of the statement that was issued by the RBI in general, but specifically on the economic capital framework? The government and the Reserve Bank will together set up a committee to look at this issue, but we just heard there from the Niti Aayog Vice Chairman saying very clearly he believes that this will go into execution in this financial year itself.
Well, I mean, I haven't seen all these individual statements, but let me just say that, I think the press built up what looked like a conflict situation. And I think that would have been very unfortunate. So I'm sure that financial markets welcome the fact that we don't have that kind of conflict. There's been a long board meeting. They've agreed to do certain things. There's not a sense of the RBI being pushed to doing things that it really doesn't want to do. On the other hand, I mean, Reserve Bank, historically, I mean, there's always been a certain amount of tension. I don't think anybody minds that. This needs to be managed in a way which doesn't look as if the system is breaking down. And I'm glad that the way things have turned out, nobody is saying that the system is breaking down. Let's see what they do in the future.
Actually, if you read the press release at the end of the meeting clearly says the board, while deciding to retain the CRAR at 9%, agreed to extend the transition period to implementing Basel rules to April 2020, etc., etc. But the point is the board decided that the capital adequacy will be 9%. This introduces a new player. Until now, we never thought that the RBI board would, try and decide how much capital adequacy has to be maintained, or, what kind of banks should be constrained because they are weak. We thought this was left to the technocrats at RBI. Now, should we genuinely start worrying about the composition of the board because it is such an important actor?
No, that absolutely goes without saying. I mean, if the board is not a purely decorative organization, which for many years it has been, then it's extremely important that the composition of the board and the competence and the background of the people on the board is very carefully worked out. There's no question about that.
All right, so that is some important opinion coming in from Montek Singh Ahluwalia, speaking exclusively to CNBC TV 18. But let's shift focus back home on Dalal Street. Yesterday, the global sell-off was weighed in on our sentiment. We were lower by about 1%, though the Indian market outperformed the Asian peers. The Nifty managed to hold on to 10,650 mark despite a 1% downtick. We were below the 200-day moving average. We saw the mid-cap index too fall by about 1% at a 5-month closing low. The bank Nifty too fell despite recovering in the last hour of trade. We saw yet another sell-off overnight. So what are the cues that are stacked up today? We have Sonia who joins us to give us all of that. Sonia, the mood would be set by crude?
Oh, yes, it would. The overarching theme, as you rightly pointed out, is that global growth slowdown fears is hitting stock markets. So overnight, you saw the Dow down more than 550 odd points. There's been a big sell-off in Asia this morning. FANG stocks have been Apple fall more than 24% since the high that it hit in the early part of October. So now most of the FANG stocks, the technology stocks, are in a global bear market. Not just that, it's the big fall in crude as well. Oil fell almost 7% overnight. It's been the biggest intraday fall that oil has seen in the last 3 years. JP Morgan actually globally came out with a note where they said they see a slowdown coming. They expect the economy, the US economy, to grow less than 2.19, and they say a reduced stimulus from a fiscal and monetary policy and a negative drag from the trade policy is what will impact growth going ahead. Of course, our market saw a lot of that play out yesterday. So the Nifty is back below 10,700. The mid-cap set a 5-week low, and there was big selling from FI. FIIs. FIIs sold about 750 crores in the cash market. The only silver lining is that rupee has been strong. So rupee hit the highest level since the 3rd of September. This morning as well, all indications are that the start could be on the softer side. But as I said, perhaps a lot of it also played out yesterday. So let's see which way things head.
Okay, Sonia, and stocks?
Well, in terms of stocks, Dr. Reddy's, as you pointed out, Ekta, the US court has now allowed Dr. Reddy's to sell a generic version of an Indivior opioid drug abuse drug. So, you keep that perhaps a positive for them. There was big delivery-based selling in banks yesterday. So we saw Yes Bank, ICICI Bank see 400 crores of delivery-based selling. Some news reports indicate that Bharti Airtel may raise $2 billion in debt, even as it faces a rating cut threat. News reports indicating that NTPC is eyeing Ratan India and Jayaprakash power plants. Jet, according to news reports, has cancelled 25 flights as pilots have reported sick. Oberoi Realty is in talks to buy Blue Star's Thane land parcel, which may cost about 120 to 150 crores. Of course, most of these are news reports, not independently verified by CNBC TV 18, but some of these stocks could be in focus this morning.